Hello everyone, here are the latest market news on February the 17th, 2020. Japan's economy falls in the fastest pace in fourth quarter. Japan's economy was falling at the fastest pace in almost 6 years in the December quarter as a sales tax hike hit consumer and business spending, raising the risk of a recession as China's coronavirus outbreak slows down global activity. Government data showed on Monday that Japan's gross domestic product dropped an annualized 6.3% in the October-December period, much faster than a median market forecast for a 3.7% drop at the first decline in 5 quarters. It was the biggest fall since the second quarter of 2014. There's a pretty good chance that economy will suffer another contraction in January-March. The virus will mainly hit inbound tourism and exports, but could also weigh on domestic consumption quite a lot, said Taro Saito, executive research fellow at NLI Research Institute. If this epidemic is not contained by the time of the Tokyo Olympic Games, the damage to the economy will be huge, he added. Global shares rise amid hopes on virus containment. Global shares reversed losses on Monday and headed toward a 3-week top as China's persistent efforts to mitigate the blow from a coronavirus outbreak calmed investors. However, Japanese stocks dropped due to growing recession risks. Due to improved market sentiment, the pan-region Euro Stoxx 50 futures increased 0.3% in early European trade, while German DAX futures rose 0.4%, and London's FTSE futures added 0.2%. Therefore, U.S. stocks and bond markets are shutting on Monday for a public holiday. Elsewhere, MSCI's broadest index of Asia-Pacific shares outside Japan advanced 0.3%, trading near last week's peak of 558.30, which was the highest since late January. The gains were helped largely by Chinese shares, with the blue chip index there jumping 2% after the country's central bank lowered one of its key interest rates and injected more liquidity into the system. By contrast, Japan's Nikkei declined 0.7% amid fears of potential recession in the country. British business will face with higher costs. UK consumers will face higher prices on goods coming from the European Union after Brexit, whether Boris Johnson signs a free trade agreement with the bloc or not, according to a major business group. Products imported from the EU after January 1st, 2021 will require customs declarations, which cost between £16, $21 and £56 per product line. They will also need documents like rules of origin paperwork, new red tape that is automatically triggered by Britain leaving the bloc's single market and customs union. Upcoming higher costs for companies dealing with the EU, which is Britain's largest trading partner and a source of half its imports, are a result of Prime Minister Johnson's approach to trade talks with the bloc. Johnson is seeking a more distant economic relationship with the EU so that the UK does not have to align with EU rules and can independently sign trade agreements with other countries. India's Vodafone will pay $490 million in telecom dues. The Indian wireless carrier Vodafone Idea said to pay 35 billion rupees, $490 million in telecom dues to the federal government by February the 21st, a lawyer for the company said on Monday. Vodafone Idea shares climbed 23.5% on Monday, marking their best intraday gain since January the 21st, amid hopes that the company could outlive the financial squeeze due to the outstanding dues payments. Earlier on Friday, stocks had dropped more than 24%. The Indian government last week ordered mobile carriers to immediately pay billions of dollars in dues after the Supreme Court threatened the companies and officials with contempt proceedings for failing to implement an earlier ruling.